Hey, it's me. I've moved. I'm usually in the top left corner. I'm in the bottom left now, just because I've got a lot written out here on my screen. I've read the book by Jared Tendler. What's the name of it? The Mental Game of Trading. And in it, he talks about mapping out your levels of greed. I've got this written down here, my levels of greed that I quickly want to go through. I don't know if you'll be able to see them too well, so I'm going to pull the screen up here, make it a little bit larger font. And on this channel, I certainly want to show you my entries, my exits, let you know where I'm right, where I'm wrong. But more than anything, I want to focus on psychology and how we can set up processes that are going to help us in our journey of trading. So, Jared recommends in the mental game of trading mapping out your levels of greed. He wants us to describe the quality of my decision making, perception of the market, opportunities, current positions at each level of greed. So if one is a very small, manageable level, which maybe is probably an undercurrent for most people, 10 would be fully out of control, blackout mode. I don't know what's going on. I look at the chart at the end of the day and I'm like, just trading all over the place. It's been helpful to me to be a little bit more self aware and mindful of what I'm doing and why I'm doing it. So, number one here would be I'm still sticking to my original plan, but once entered, I may be a bit uneasy and I choose to exit prematurely. I start out taking notes and writing things out. I'm not really trusting my gut about a stop loss when the trade just isn't working out. I'm keeping on a small size, maybe it's 1 micro, so I don't miss what could happen. Number three, then, as I'm progressing, getting further down the rabbit hole of greed for me, would be that my eyes are stuck to the stop loss and target versus screens that don't have them. And for me, sometimes if I just look at a clean screen without my target and stop loss on there, it helps me be a bit more objective. Because sometimes your eyes can really gravitate towards the red and the green, my stop and my target, and that can cloud our vision a bit. I'm doing my best to read the market well by allowing time to see what the market is trying to do. I've still got on small, manageable size. I'm journaling less, however, because I don't want it to interfere with my observation of the market. Number five here, and this is where it turns into like make or break. If I'm at a level five and I'm mindful, I can easily pull it back down to a level three and then one and get some clarity, get some perception, get some good things going. However, if I don't get a control of myself and start to become more self aware, it can get problematic quickly. My ego starts to get in the way and clouds my perception. My perception is that the market lacks opportunity, so I have to make something happen and stick my neck out there. I'm usually trading small, but not with any real plan at all. I've got a misconception that journaling will take me away from complete concentration on price action, i.e., every tick. And the way I like to trade is based off of the 5 minute. I use the 1 minute for a little bit of nuance, but it's predominantly based on the 5 minute. So for me, watching every tick, watching the dome, having it pulled up, it does me no good at all. So journaling is getting in my way, and so I stopped doing it. Seven here it gets kind of ugly. I'm out of control. I'm still able to get out at a loss to get smaller, but then quickly jump back in based on reactive movement that I'm seeing. So if I'm watching the 5 minute bar and I'm waiting for bars to complete, unless I've got a real strong feeling about something, it's not going to be good for me to jump in on a bar where there's nothing just because it has some kind of, crazy nuanced move that I'm not expecting. I need to stay in my lane and focus on setups and patterns that I'm familiar with. Level 8 here is I'm hyper focused on every tick. I'm sizing up. I'm getting bigger. I'm telling myself it's only micros, so it's okay to average in. That way you don't miss the move. You'll have skin in the game. You'll be involved. Number 10, here it is right here. This is like make or break. This is where it gets ugly. I am married to this one trade. If it doesn't work out, it can be really, really bad for me. I think I've accepted the risk, but I would do anything to get back to break even. Sizing in larger than 7 or 8 micros and getting crazy. I'm not objective at all. There's nervousness. Decision making is very irrational. The process is very different than what it should be. There is no process, no plan at all. I'm looking at every tick. I'm hoping and I'm praying and I'm nervous. And so being mindful of this and writing this out, really thinking it through, has helped me quite a bit in being a bit more self-aware, because we've all been there with trading. We have a good hypothesis, we put a trade on, it doesn't work out, but we convince ourselves that it still may, and we can size up or we move our stops, you name it. It happens to the best of us. So hopefully that was helpful. Hopefully some insight was gleaned, and you can use this for yourself as well. Here's to good trading. Here's to good trading psychology and managing our capital well, not just our financial capital, but even more importantly, our emotional and mental capital.